Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. And our website is www.stochastic-macd.com. The title of this video is how to profit from Australian US dollar in 2015. How to profit from the Australian dollar, US dollar in 2015. All right, let's get started. Professional traders trade around key levels. Ordinary traders use technical indicators to enter the trade. It's a very big trading mistake. If one wants to buy at a valid support level. All right, very important. If one wants to sell at a resistance level. All right, the next thing that a trader should avoid is to trade against the market pattern. Or as I've said 100 times, all right, there are three market patterns: the rising channel, the declining channel, and the horizontal channel. All right, so if we want to sell, anytime you want to sell, ask yourself, am I selling at a resistance level? Anytime you want to buy, check whether you are buying at a support level. This will allow you to avoid trading mistake. The next thing you want to verify, am I trading against the current market pattern? So, but when we are talking about the market pattern, we want to align, our trading setup with the market pattern, the signal with the market pattern, and a low risk entry point with the market pattern. So when you see the setup on the higher time frame, and then you go to the signal time frame, you want to align everything with the market pattern on each time frame. Same thing, if you are, for instance, entering your trade on a 5-minute chart or 10-minute chart, you want to align your entry point with the market pattern. This will allow you to enter the market at the wrong time. The most challenging thing for a day trader or a swing trader or any market participant is the timing. When are you coming into the market? All right, you can be wrong about everything else, but if you time the market correctly, you are likely to profit from it and also have a less stressful, trading. All right. For the Australian dollar, as you can see on the weekly charts, all right, we have what we call a declining market pattern because the price is displaying lower lows and lower high. So in this scenario, we must give priority to what? Sell signal. So you don't want to fight the market pattern. So one thing I need to mention also to traders, if you are a day trader, or you are a swing trader, you do not want to violate the weekly market pattern. All right, very important. So when you are taking a contra trend because the price is going down, sometimes it will rally up. This move is what we call a contra trend. If you are taking a contra trend, you want to minimize the risk and control the risk because you know that the price is in a declining channel, but there is a price move going up, which is a contra trend for your weekly chart. So as of today, I want you to avoid this mistake. Every day, check the weekly market pattern and know whether you are in a contra trend or not, whether the price is rallying in a declining channel or is going down in a rising channel. All right, so buy at a support level, sell at a resistance level. Do not violate the market pattern. Know whether it's a contra trend or not. All right. The next thing that we want to share with traders, you want to know the market itself. What is happening in the general market environment? So today we are looking at the Australian dollar, US dollar. What is the market thinking of this Australian dollar, US dollar currency pair? Now, in this scenario, a new trader may find it a bit difficult, but do not worry. You want to know, go to Forex Factory, check the economy news. This is very important for us. For the Australian dollar, US dollar currency pair, we know that, I'm going to go now to the yearly chart, and I want you to understand this, From 2009, from 2009 up to 2012, the Federal Reserve, talking about the US dollar, was devaluing the US dollar. So as this was going on, the central bank in Australia was putting up interest rate. So the Australian dollar was rising against the US dollar. So from 2009 up to 2012, this is about the market, what the market was thinking about this Australian dollar, US dollar currency pair. They were bullish, so that the price was going up. Now, from 2012 going out to 2013 up to today, the Federal Reserve, the US Federal Reserve, was saying to the market that they can put up interest rate at any point, that they have stopped devaluing the dollar. So what that means? It means that the dollar has a high chance, the US dollar has a high chance to appreciate. At the same time, the Australian Central Bank is not putting up interest rate anymore. So the bullish momentum or the market sentiment, in relation to the Australian dollar has changed since 2013, in fact. So you can see here, that's why it started going down. So why am I saying this? So you may know what the market is thinking of this currency pair. All right? They think that it's bearish. All right? When we use the word bearish, the first thing that to click into your mind is support level. I want you to remember this. Whenever you are bearish, whenever you know that the market is bearish towards a financial instrument, the first thing that you should come into your mind is support level. The price going down, what is happening? The price looking for, a valid support level. The same thing, when the price going up, the first thing that should come into your mind is a resistance level. The price going up is going to a resistance level where the price will change direction. You see here, so going up 2009, looking for a valid resistance level. Here it was, and then it changed direction. So now that the Australian dollar was going down, you can see that it was going down. We can say from 2000, in fact, 2011, 2012, 2013, 2014. We are now in 2015. It is going down. So we are looking for support level. So where are the support levels? This is what's going through the mind of the professional traders. They are trading around key levels. So if they want to sell at a resistance level. But because the price is going down, we want to sell at a resistance level. But as the price is going down, the first thing that is coming to our mind is what? Support level. All right? So I'm going to give you now some key levels. This video is so important for traders throughout 2015. All right, so you can come back to it and watch it. Take a note, as I explained to you before in the previous video, about the US dollar, yen, and also the euro dollar currency pair. All right, key levels. All right, so you know what is happening, what the market is thinking of this, and which market pattern we have on the weekly chart. Because if you're a day trader, swing trader, you don't want to trade against the weekly market pattern. So the first key level that I'm going to give to you is what we call the short-term equilibrium price level. This level usually will last for 2 weeks. Sometimes it may remain in place for a long time if the price is not going too far, The current short-term equilibrium price level for the Australian dollar, US dollar, is at 7961. You can see this week, this is the orange line here, it was trying to come to retest the short-term equilibrium price level, but you can see it found a resistance on the edge of this, bearish channel. You see how I draw the channel? This point, and this point allowed me to draw the top of the declining channel, and I just choose one point here to make a line parallel. In my mind, when I see this like this, I'm thinking of, bearish momentum, also about support level, the price looking for support level. If I want to sell, I want to sell at a hotspot trading zone on the edge. Check the webpage at www.stochastima.com, hotspot trading zone, and also market trading zone. All right? So, this is it. So it couldn't touch it, the short-term equilibrium price. Note that level down, note it down. It's still in place. It has been in place for some time now. The price this week tried to come near 7961. Usually stay in place for 2 weeks, but this one has been in place for some time now. But the market pattern is the number one thing we do not want to violate. It's the key. So we are on the edge of the declining channel, all right? But you see here, before it retested the result, the edge of the declining channel, we have here on the weekly chart a kind of a consolidation taking place here. So apart from the short-term equilibrium price level, I want to highlight, okay, you see here, though we are in a declining channel, there is this, okay, the price is not displaying lower lows, lower high anymore on the weekly chart, okay, but it's still in a declining channel, okay, it's still in a declining channel, but we have a consolidation because the price oscillating between two levels, you see here. So the top of the consolidation is at the 7913, note it down, okay, and the lower part of the consolidation is at the 7662. All right, 7662, something like that, in that zone, okay? These are not exact level, okay? So if I say a different number, all right, don't be surprised, okay? 7913, okay, 7662. So it's oscillating in this small channel, okay? Let's call out that small channel into green so you can see clearly, okay, on your chart, okay? So though we are in a declining channel, we have a small, okay, a consolidation market. So the price now on the upper side will find a resistance to come back down and oscillate more. All right. So if you are a swing trader and you receive a sharp signal on the edge here, you will take it. Okay. But if the signal fell, you will come out. So you will draw a warning line here, which means this level of 7913. If it goes above it, don't fight it. Don't fight it. Okay. But if you find a resistance and the signal remain in place, okay, it may go back down, okay, and continue to oscillate. If we break above, okay, the level of 7913, all right, game on. But be aware of the short-term equilibrium price level at 7961. All right. So if, for instance, you are TSTWSY as usual a trader, TSTW24 trader, you want to trade on the edge. Yeah. So you see here on the weekly chart. So after this, traders sold it here. This is a beautiful place. Okay, swing trading using the market pattern alone. Top-down trading, this is not the entry point, this is not a signal, this is the trading setup. Okay, go to the signal time frame and then low risk entry point on the edge. It worked beautifully. Now we are on the edge of the lower part. Traders are buying here, but the price is not going out. It went horizontal, but again now it's retesting it here. Don't forget what the market is thinking of this currency pair. They want to sell it, but it's going down now for some time. I'm going to go back now to the yearly chart, okay? So we know what's happening and where, because you want to know where you should enter the trade on the edge at a hot spot trade zone, always, okay? On a yearly chart, you can see that from 2009 to 2012, okay, you can see 2011, okay, it went up, okay, up to this point. Now it's going down. It's going down, price looking forward, support level. There are some support level here, okay? There's another level I want to mention to you, the pink line here. This is the long-term equilibrium price level for the Australian dollar, US dollar currency pair. You can forget about the short-term equilibrium price level throughout the year, but this long-term equilibrium price level, do not forget it throughout 2015. It's at 8544, 08544. Have a notebook or on your smartphone, note it down, all right? Here it is, 8544. In 2015, do not forget this level. You may not come back and retest it, but do not forget it, okay? Professional know it, do not forget it, all right? So now as the price going down, there are some hidden support level. One is here, is the 78.6% Fibonacci extension level, Fibonacci retracement level, 78. Trader use 78.6%. I use exactly 78%. I don't use 78.6%, but the correct Fibonacci number is 78.6. But the line that I have here, you see the green line here. Let's make it a bit greener here. All right. That's the 78.6% Fibonacci retracement level. That level is considered as oversold if the price is going down for a long time. You can see that from 2011, 2012 up to today, it's going down. So the next level that the professional are watching is this level here. It is 78.6% Fibonacci retracement level. As I explained to you, I'm using here 78% exactly, not 78.6. So be aware of 7333, 07333. This is the 78% Fibonacci retracement level. That level is considered as oversold. Doesn't mean that if the price comes here, it will definitely find a support. All right. You know what's happening? When you go to a trading firm, all right, there are traders that are specialists of a certain currency, like some specialists of the euro dollar, specialists of the dollar yen, specialists of Australian dollar, US dollar currency pair. We know that the Australian dollar, when we are talking about Australian dollar, we are talking about a commodity also. Do you know? Gold will influence this currency pair. All right? Know it. Gold will influence this currency pair. If gold is going up, the Australian dollar is likely to go up. If gold is going down, the Australian dollar is likely to go down. You want to understand the correlation between the Australian dollar and gold. Now, gold is also what we call a market indicator, okay? So apart from the technical indicator, we have also what we call the market indicators. Crude oil is a market indicator. Gold is a market indicator. The dollar yen is a market indicator, all right? So gold is positively correlated to the Australian dollar, US dollar currency pair, all right? It makes sense? So do not forget, this is what the price was heading towards the 78.6% Fibonacci retracement level. Will it find a support? If you find a support on your, for instance, 2-hour chart, 4-hour chart, you may see a kind of bullish pattern, or price going to a rising channel, or start displaying high lows, high, or price failing to display a new lower low. Now, when this is happening, sometimes traders will rush into the market. Don't rush into it. Be patient, and like a cat, right? Be patient like a cat. Let it align nicely for you, and then enter. If you fail, just pull out, cut the losses, just pull out, smile, okay? Breathe in, breathe out, and then wait again, all right? It may not be ready, but when it's ready, all right, and it's properly cooked, you will be rewarded, all right? All right? So don't forget the 7333, that's the 78% Fibonacci retracement level. If that level fails, which means D below it, retest it and find a resistance, still in a declining channel, on setup, signal, and entry point and frame, on the edge, we can still sell it, and in that case, we bring it to 100% Fibonacci retracement level, which is a cycle point. Price went up, price returned back to the starting point, and the cycle point for the Australian dollar is at a 6290, 6290. All right? You can't say that you don't understand my asset. You understand my asset, okay? All right, this is to make you laugh, by the way, okay? I'm going to note it down myself here. Cycle point for Australian dollar, US dollar currency pair, okay, is at a 6290. So now you know the levels that the professional traders are watching. And if you don't want to go before the professional trader, you don't want to step on their feet, all right? Because if they're going to buy, they want the price to go down more, all right, at the best place, all right? And then they want to buy at the cheapest price, all right? Because they're going to remain in the market for a long time, all right? They want the best place. So, though we are watching the level of 78% Fibonacci retracement level, which at a 7333, the price is very close to it. You see, it went down, okay, to the level of 7626, not far from it. So if it continues to go down, they would like to retest this level, all right? But remember, if the price hit a very critical support level like this, you want to know what's happening, all right? What's happening? What is happening, all right? So the Federal Reserve keeps saying that we're going to put up interest rate if the economy in the United States is improving. There are more job creation, conditionalized. So it's telling the market, keep buying the dollar, keep buying the dollar, keep buying the US dollar, keep buying the US dollar, keep buying the US dollar, until we tell you not to do it anymore. All right? So be aware of this. So if you hit this level, this is a technical warning, but watch the market sentiment. Has anything changed? All right? Any market pattern usually will reflect the market sentiment. You see how we see on the weekly chart is in a declining channel. The market pattern are reflecting, okay, especially on the higher time frame, monthly chart, weekly chart, is reflecting what is the market, the general market is thinking. That's why we don't want to fight the market patterns, okay? So we talk about the short-term equilibrium price level, For the next 2 weeks, don't forget 7961. Throughout 2015, don't forget the long-term equilibrium price level at 8544. We will come back to this currency pair somewhere, probably in August or something like that. I will be talking about them more. If anything has changed, all right, I'll put up another essential Forex trading video like this for traders so they may go back to it each time, okay? So to improve their trading. I know some traders trade most of the time the Australian dollar, US dollar currency pair, all right? I have also mentioned that we have, okay, a tiny horizontal channel on the weekly chart. So if you are swing trader, day trader, this week, watch out that small green channel on the weekly chart, okay? Though we are in a declining channel, there is a horizontal small green channel. Remember that? All right? I have also mentioned the 78% Fibonacci retracement level. Price going down, price looking for a support level, 7333. If that level fell, sometimes you will see it deep below it, retest it, but if the market, remember the market sentiment, okay, economy news can change the dynamics of the market anytime, all right? See what's happened to the, all right, the Euro Swiss franc, all right, economy news. Okay, the Swiss National Bank came out and messed up, okay, the Forex market this year. Some brokers even went out of business. Madness. Economy news, pay attention to it, all right? So, but the cycle point, which means we started from here in 2009 at this level of 6290, price went up all the way up to the highest points at 11055. This is the red line here, horizontal line here. Okay, now it's coming down. We are watching the 78% Fibonacci retracement level. If that level fell, we return to the cycle point at 6290. If we come to this point, that will form a double bottom pattern. But remember, okay, market sentiment, economy news, fundamentals will decide whether it will change direction or not. Do not use the technical analysis alone. The next thing that I need to mention to you, because you are my very good friend, all right, the euro-dollar currency pair, which that's why when I was recording this series of video, okay, Forex trading, euro-dollar 2015, FS trading, okay, US dollar yen, or you remember, I start with the euro-dollar first. Why? Because it's the leading currency pair, all right? Next week, I will be analyzing, okay, the dollar-Swiss franc currency pair. The dollar-Swiss franc currency pair will go into the opposite direction to the euro-USD. So if the euro-dollar is going up, the dollar-Swiss franc will be going down. Okay, the correlation between this currency pair is negative. Euro-dollar, dollar-Swiss franc. All right. So, but for the Australian dollar-US dollar currency pair, the Australian dollar-US dollar currency pair goes in the same direction like the euro-USD. So though we are analyzing the Australian dollar US dollar currency pair here, talking about okay, how to profit from the Australian dollar US dollar in 2015, this is this discussion, all right. Traders should not forget that if you are trading the Australian dollar US dollar currency pair, you are indirectly or directly, in fact, trading okay the euro dollar currency pair. So what's happening to the euro-dollar currency pair is going down at this present time. I have talked about support level 1, support level 2. You note it down, okay? You remember last time, okay, for the euro-dollar. I still have my notes here, all right? The key level for the euro-dollar, okay? You want to remember them. So though we are talking about the Australian dollar, US dollar currency pair, so suppose Monday or next week you are trading Australian dollar, paying attention to everything that I've said here, okay? Keep your left eye on the Australian dollar, but keep both eyes on the euro-dollar currency pair, because the best scenario is to look first, okay, how traders trade baskets, okay, basket of currency pair. So euro-dollar give a beautiful setup, bullish setup, all right, solid setup at a low risk entry point. Okay, some trader will go straight away and buy the euro USD, buy the Australian dollar US dollar currency pair, buy the pound dollar currency pair, pound GDP USD. Okay, am I talking normally to you? All right, or am I getting hungry already? All right, so trader will buy currency pair that are positively correlated to the euro dollar currency pair that goes in the same direction like the euro USD. They'll go and buy them together. But if you are a new trader, don't get into this basket, okay, trading because there's a lot of risk. Okay, some traders get into trouble. I do not recommend it very much to trader because the market, because of what? Hedging activity in the market. All right, you know what is hedging? So sometime a currency pair that is perfectly bullish, all right, suppose the Australian dollar is bullish, all right, the euro dollar also is bullish. So some hedge fund will go and buy the euro dollar, but instead of buying the Australian dollar US dollar currency pair, they will sell the Australian dollar US dollar currency pair. What they are trying to do is to protect their euro-dollar currency pair. This is what we call hedging, okay? So they are using the euro-dollar trade as a normal directional trade, but by selling the Australian dollar, US dollar currency pair, which is normally going in the same direction as the euro USD, they will go and sell it to protect their euro dollar currency pair. So that's why I do not recommend to traders, okay, to use a basket trading. Sometimes it will work beautifully. I trade it sometimes, I will use only 2 currency pair and I keep my eyes on it, okay, because of the hedging activity. That's why sometimes I do not analyze too many currency pair because of the hedging activity in the market. Trader will go, especially sometimes, I see sometimes TSTW24 traders, we go for instance, trade the Euro GBP, the Euro pound currency pair, and they will forget about hedging, and they will forget about the correlation. Though the Euro may be bullish, hedge funds, okay, big institutions may sell other currency pairs that are positively correlated to the euro dollar. All right, that's why I prefer when I'm trading the Forex, I trade the euro dollar more than anything else. And because it's the leading currency pair, one can also trade the dollar Swiss franc, but the dollar Swiss franc is quite volatile, and the requirement for stop loss is quite high sometimes for the dollar Swiss franc currency pair. I want you to understand this so you don't get into trouble, because a lot of Forex traders do not know what is going in the market. They will use technical analysis alone. Yes, you may see a beautiful setup, a beautiful signal, and then which is bullish, and then the price will go down. This is about hedging. They are buying another currency pair, but they are selling another one, not for a proper signal. This is not trading activity. This is that they are just selling. So they are piling out, they are piling their trade on the euro, but they are selling, for instance, Australian dollar, US dollar currency pair. Though technical trader may see a bullish trade or a beautiful setup, they end up losing, and they wonder what's happening to their trading system, and they go and buy another system. Don't go and buy 100 systems, only one. In fact, when a trader go and buy many of our systems, I worry a little bit, I worry a little bit, Just one system, bank, master it, work on it, Stay focused. The price is the number one indicator, And then just, focus on it. Without focus, there is no success, All right. So now I'm going to go, because, go to the daily chart so we know the key levels. This will allow you to navigate through this messy Forex market. All right. So on the daily chart again, our channel remain intact, and also the small green channel here, you see, is still in place. So we want to know, the short term, market pattern is horizontal. The medium term is a declining channel. All right. So you want to be careful. Market sentiment. So be gentle. All right. Be gentle. Be gentle on the edge. All right. It's on the edge now, but some trader took advantage of it at early stage. It's on the edge. So if you have been making a lot of mistakes, it means most of the time. So some traders hate it when I say something like this, There are various reasons why traders lose, but the number one reason why traders lose, all right, is because you violate the market pattern. Most of the time, this is the bottom line of many, downfall or mistakes, all right? See here, You see, even though in a declining channel, weekly chart, do this, There are, you see, normal progression. All right. You went back to retest this channel. You want to know which one are contra trend. You see the declining channel, but it's going up. Oops, I moved my line. That's my short-term equilibrium price level that I move now. Let's put it back. 7961. Yeah, somewhere there. Okay, it's now showing 7964, but somewhere there, 7961. Okay, 71. Okay, I can do it properly now. Okay, 7961. Am I correct? Have you taken it? Note? Okay. Okay, now, because I'm trying to avoid that the video too long. Okay, I leave it like that. Okay. All right, you see now. So if the price is in a declining trend, there are contra trend. You want to know which one is a contra trend. The move to the upside is the contra trend. All right. Pay attention to the price. Price going down. Price might display lower lows, lower high. But in a downtrend, our attention is on the lower low. Here you see this is the lower low. But since then it's going a little bit horizontal here. We will have, because sometimes the price will go down, slow down in the horizontal channel, and then continue to go down. So be aware of it. So if I want to trade this, I'll trade it here from the top here, and I'll avoid the buying it from here, okay? Until it goes into this section here, all right? Okay, break above the top of this green channel, and then probably find the support, but be aware of the 79661, which is the short-term equilibrium price level, okay? All right? So this on a weekly chart, on a daily chart instead, that's what we see again. If I go, for instance, for a 2-hour chart, do we see any bullish pattern here? Okay, all right. Bullish pattern will be formed where? At the support zone. Bearish patterns will be formed at a resistance zone, all right. But the bottom line, market pattern, we do not want to violate the market pattern. So though we see a bullish market pattern, a bullish pattern, you see now, chart pattern, market pattern. On top of every pattern, Fibonacci pattern, Elliott wave pattern, chart pattern, whichever pattern you call it, the market pattern is number one. Every other pattern we must align with the market pattern. It's what we call a market stabilizer. How do I come with that? I have been losing for years, ladies and gentlemen, and I was thinking, for something that will remain intact in this messy market, and the market patterns remain intact on every time frame, every situation, all right? The next thing, do not forget to check the economy news if you are trading Forex. I know, okay? All right? If you are like me, okay, you don't want to know, but just be aware. Go to Forex Factory, look at it, the red envelope. Okay, when is the economy news due? So when you are day trading, you know that, okay, soon this economy news is going to be released, especially if you are trading Asia session. All right, sometimes some late economy news. Sometimes the economy news may be due late in the night, all right? But beginning of the day is already playing on the mind of trading. You will see very often for the Australian dollar, US dollar, the economy news is due, for instance, midnight in London. But as London is open straight away, the professionals start adjusting for that economy news that is due late in the night. Or sometimes the economy news due 2 days later, okay, or on Friday, or on Thursday, or Wednesday, but on Monday straight away, the market start adjusting to it. So check the economy news for the whole week and know what is going on. So on a 2-hour chart, we have a double bottom pattern here, but the market pattern, the short-term market pattern, is horizontal. The medium is what? A declining channel. So we need to take this bullish pattern a bit cautiously, okay? If you want to pay attention to it, be gentle, all right? As always, like I've said before, okay? The trend line, okay, and the channel, we allow traders to make excellent decisions. On your time frame, on your entry time frame, or your setup time frame, okay? On any time frame. So it allows us also to cut losses. So if a trend line is violated, some trader will come out straight away. Depending on your risk tolerance, know what's happening, okay? So next week, okay, we will prefer it, okay, if it doesn't gap up and run away here, okay? So we will prefer it because in my view, okay, we prefer it if it's going to, okay, to continue to, we prefer it to come back and retest this level to form a kind of a triple bottom. But remember, the Euro USD will influence this Australian dollar US dollar currency pair. The situation in Greece, depending on the euro, we see last time, okay, how I was validating my wave count at 248 with YouTube channel. We have seen that, we start counting wave, but the market sentiment is playing on the euro, and the euro start going down. So for this currency pair, all right, as long as we are in this, okay, blue declining channel, priority to sell signal, until we come out of it, so zone, breakable, retest, solid support, top-down trading method, we take it from there. This is the end of this video about how to profit from the Australian dollar US dollar currency pair in 2015. We were talking about key levels, all right? The first key level is the short-term equilibrium price level at 7961. The long-term equilibrium price level is at 08544. All right, there is another level that we have also talked about. That's the 78% Fibonacci retracement level at 07333. All right, there is a bigger range on the yearly chart, and the cycle point is in a zone of okay, where am I? Hold on. The cycle point at 6290. Okay, 6290. Okay, all right. We do not want to violate the market pattern, all right? We do not want to trade against, okay? The general market sentiment is about selling the Australian dollar US dollar currency pair because of the Federal Reserve decisions, all right? But we want to trade on the edge. If you want to buy at a value support level. We want to sell at a resistance level, all right? All right, the Australian dollar US dollar currency pair is positively correlated to the euro dollar currency pair, so we must keep our eyes on the leading currency pair, which is the euro dollar currency pair. All right, the short-term equilibrium price level will remain in place for the next 2 weeks, but the long-term equilibrium price level, we need to watch it throughout 2015. Though the Australian dollar US dollar currency pair supposed to go in the same direction with the euro USD, all right. Sometimes, due to hedging activity, all right, one may see a bullish setup for the Australian dollar US dollar currency pair, but the bullish setup will fail because other traders that are buying the euro US dollar currency pair will use the Australian dollar US dollar currency pair as a hedging tool by selling it just to protect a trade. These are not a real trading activity. At the end of the day, ladies and gentlemen, it's not all about technical analysis. It's about combining the technical analysis with the fundamentals, okay? Talking about the economy of Australia and the economy of the United States, decisions that are made by the U.S. Federal Reserve and the Australian, the Bank of Australia, okay. Next week, I will be recording another video about how to profit from, the dollar Swiss franc, which is going in the opposite direction with the euro USD, okay. And I will be giving you also key levels. This level will allow us to navigate through the Forex market throughout 2015. I hope you have learned something for this video also, and we put into use, okay, to make excellent day trading, swing trading, and investment decision. We are the TSTW24 traders talking about how to profit from Australian dollar, US dollar currency pair in 2015. Until the next time, enjoy yourself and be very happy. If you like this video, please subscribe to our channel so you do not miss, some of these type of video. All right, subscribe, to Joe Trio YouTube channel, 248 YouTube channel, Day Pro Trader YouTube channel, okay, and also to our website, stokastima.com, 248wave.com, dayprotraders.com. All right. If you love this video, okay, give us the thumbs up. If you dislike it, please give us the thumbs down. Do not be afraid. You are still my friend. Give us the thumbs down, but put a comment below, okay, to tell us why, you disagree with us. Okay, if you're truly in love with this video, as I like to put it to you, okay, feel free to share it at Google Plus. Open Google Plus account. I have a Google Plus account, okay. You can follow me, okay, at, Georges Beaulieu, that's my name. Look for Georges Beaulieu, okay, Google Plus account, and you can follow me, and I'll follow you also, okay? And you can share it on Google Plus, share it on Twitter, and also on Facebook, stokasticmadi.com, Facebook, Twitter, okay? We are also on Twitter, on Facebook, okay? So until the next time, my friend, enjoy yourself, and be very happy. Speak to you soon.